Investors will need to be brave, patient, and agile when the stock market shifts from a bear market to a bull market in order to identify the best stocks to purchase in 2023. Because many market analysts believe that you cannot transition from one market to another without experiencing a recession first, go ahead and add determination to the character traits you will need this year. According to Russ Koesterick, portfolio manager of the BlackRock Global Allocation Fund, given the pace and intensity of Fed tightening, there's a substantial possibility that the US will enter a recession in 2023. Notwithstanding this, our presumption is that the recession will be moderate due to healthy household balance sheets and resilient spending. Here are 10 of the top stocks to purchase in 2023, keeping everything in mind. The names included here range in size and sector, and they are not intended to make up a diversified portfolio. But for a variety of reasons, everyone is in a good position to profit from the shift from a bear market to a bull market in 2023. 10. Lululemon Athletica. $41.3 billion in market value, 0% dividend yield. Lululemon Athletica, $323.82, is a seller of casual clothing. Despite comparable store sales increasing 22% in the most recent reported quarter over the same period the previous year, the stock has decreased 3.3% over the past year. Rarely do you have the opportunity to purchase such a fantastic firm at what looks to be such a low price. Currently, shares are trading for 28 times expected earnings. When compared to the 5-year projected PE ratio of 43, this does not appear as expensive at first glance. 9. Merck. $279.8 billion in the market yield on dividends, 2.6%. Merck, MRK, is why. On this list of the top stocks to purchase in 2023, the large pharmaceutical company is renowned for its impressive results during the last 10 years. A consensus rating of buy among analysts suggests that they are optimistic about MRK as well. There are 26 analysts who monitor Merck, and of those, 12 rate the stock as a strong buy, 6 as a buy, and 8 as a hold. Analyst Trung Nguyen has given MRK an outperform, buy, recommendation. Keytruda, the company's most valuable asset, will lose its patent protection by year's end in 2028. 8. Resources for Matador. Market capitalization, $7.1 billion, 0.7% dividend yield. MTDR. Matador Resources. Oil and gas exploration and production business, $59.97, has increased over the past year along with other energy companies. Particularly, the price of MTDR stock has increased by about 32% since last year. There is greater wiggle room, according to analysts. S&P Global Market Intelligence estimates that the consensus price objective is $71.77, which would imply a predicted gain of approximately 20% over the next few months. MTDR is one of the greatest values among the top stocks to buy in 2023, despite its impressive performance on the charts. Shares are currently trading for only 6.4 times projected profits, which is much less than Matador's 5-year average of 11.7%. 7. Workday Market. $42.8 billion. Workday dividend S yield is NA, $166.69, is a top provider of cloud-based term software. According to Lori Keith, co-manager of the Parnassus Mid-Cap Fund, it has really been able to carve out a strong position based on its patented technology. 50% of the Fortune 500 utilize its platform. Customers also tend to stick around once the software is set up. Workday has a 95% customer retention rate. Workday has decreased by more than 34% over the past year, like the majority of tech stocks. Furthermore, Workday only made a tiny profit during the previous fiscal year, ending in January. Analysts anticipate that will change in 2024, helped by revenue growth of about 20% in 2023 and 2024. 6. T-Mobile US. $181.9 billion in the market. T-Mobile US, TMUS, has a 0% dividend yield. Based on market share in the United States, is the second largest wireless carrier, $146.10. However, according to CFRA analyst Keith Snyder, it is outpacing the competition in terms of growth. The analyst claims that our strong buy recommendation reflects our expectation that T-Mobile will continue to outgrow peers. T5G Mobile's network is rolling out at least a year before Verizon's, VZ, and AT&T's, 5T, networks. 5. Rexford Industrial Realty. $10.8 billion in market value yield on dividends, 2.2% among the most interest rate sensitive sectors. Real estate investment trusts, REITs, have decreased by an average of about 20% over the past year. According to analysts at the investment firm Stifel, the most recent sell-off was excessive. Industrial REITs, which offer warehouse and logistics services, offer a chance for growth at a fair price, according to Stifel, even if you're still hesitant to invest in office parks or shopping centers. $58.57 in mid-October with a buy rating and a $64 price target for the next 12 months. Rexford concentrates its efforts on a single, sizable market, Southern California, which Stifel claims to be the country's largest industrial market. According to the analysts, the team at Rexford has deep roots and a long history in the area, which give it a strong sense of market demand. The analysts also note that the lack of available space allows Rexford to command rental rates that are higher than average. The shares of Rexford have a 2.2% yield and have a strong balance sheet. 4 Deckers Outdoor. Market size for $11.1 billion, 0% dividend yield, $420, may be best known for its cozy sheepskin shoe brand UGG, but analysts at Bank of America Securities believe that the Hoka brand of running shoes, which has a clear runway for growth, is the jewel in the crown of the small mid-size company. By fiscal year 2025, Bank of America anticipates that Hoka brand sales will have doubled to $2.2 billion, ending March 31st. $3.2 billion will be the total company revenue in 2022. Decker's largest division, however, is UGG's, which has a healthy cash flow and high profit margins. The brand has a good chance of maintaining its popularity from the pandemic era. The management team at DEC, which has a reputation for being conservative and for consistently exceeding expectations, is well liked by Bank of America. In essence, the analysts describe Deckers as a high-quality stock with a compelling growth trajectory. 3 Halliburton. $38.6 billion in market value. Halliburton, HAL, dividend yield, 1.1%, $42.53, is one of the biggest energy service providers in the world, according to Argus Research. A global company operating in more than 70 countries with more than 40,000 employees. It provides goods and services that help with energy exploration and production, including finding the oil, drilling and finishing the well, and managing geological data. After the post-pandemic global economy opened, there was already a shortage of oil. Then the Ukraine war broke out. As oil companies increase production, Halliburton stands to gain. According to Argus, CEO of Halliburton Jeffrey Miller informed analysts that the company was beginning a multi-year upcycle. Halliburton should produce significant free cash flow in the upcoming quarters, according to the investment research firm, which also points out that the dividend was nearly tripled. 2 Ahead Micro Devices. Market capitalization, $115.4 billion, 0% dividend yield. When changing your portfolio to incorporate the top stocks for 2023, don't fully disregard the principles of diversification and reject tech or the market's growth sector. Use a barbell approach instead, advises Tony DeSpirito, Managing Director and Portfolio Manager at BlackRock. By doing so, you'll be able to buy value-oriented equities at historically appealing relative price-to-earnings ratios, P/S, and high-growth stocks at prices that have dropped from astronomical heights and are now at normal, if not still underpriced, levels. He asserts that businesses will continue to spend money on hardware and software to offset increasing labor expenses. Several of these businesses also have excellent balance sheets. For example, Advanced Micro Devices, AMD, $71.59, a renowned semiconductor producer. Due in part to the fact that an economic slowdown and unfavorable investor sentiment are immediate roadblocks, analysts have differing opinions on AMD. 1 Amazon.com. $979.9 billion in the market, 0% dividend yield. $96.05, is currently so inexpensive that the price-conscious management of the Dodge & Cox Stock Fund, one of the greatest low-fee mutual funds, just bought shares. According to the managers, they take the long view and are drawn to businesses with excellent fundamentals where expectations and prices have decreased. Amazon is suitable. Over the past year, the stock has decreased by 40%. Is this once favored growth stock currently a value stock? In comparison to previous levels, shares are affordable. With a share price of $96 and a 5-year historical PE of 73, Amazon stock is trading at 50 times projected earnings in 2023. The company's strong position in its core markets will support AMZN and help it gain a spot on this list of the best stocks to buy in 2023, despite the possibility that a recession may hurt short-term results. Using a sum-of-the-parts study, Shyam Patil of the investment company Susquehanna International Group has assigned a price target of $140 for the stock over the next 12 months, which would indicate an estimated gain of about 46%. So, that's it for today. We hope you enjoyed the video. Use the comments section below to tell us what you think about the video. Also, make sure to subscribe to our channel and click the bell button to be notified of all the latest videos.